Alrighty, Doc here from North America. Good morning, good afternoon, and once I get this headphone set on, good evening. How about those Tokyo numbers? Wow, record buying of bonds. Record, $123 billion worth. Everybody's keeping the world afloat. That's what it seems to be. It seems to be that's exactly what's going on. It's this kind of I don't know. I want to use the word pretend, but they're real dollars. You can buy things with it, so it's not pretend. That's for sure. But it is amazing. And let's dismiss that. There it is. That means that I'm up on there. There is the volatility yesterday. Let's take a look at the dollar index to start off with. Let's get the chat line going too. Let's see. Let's just put the dollar index up there, and then we'll go to the chat line. You can see dollar kind of, we've been saying that, it's just being a little wishy-washy, a little dead cat bounce. Dead cat bounce. Let's put it up on the screen here on the mercantile, on Chicago Quant here, the mercantile dollar index versus the DXY, the battle of the dollar indexes. You see here we're playing with the daily sell again now right there. And you can see same thing over on J4X. You can see we have a little red candle going on. You see the little green line piercing the dashed line. Oh, come on, machine. What is up with this thing? I downloaded what I was going to do yesterday, but it's being a little antsy, so I'm just going to start another computer. And it seemed to want to function well. I put it to sleep, and it came awake this morning, and the machine, that computer, I might have to go buy another one, replace it. I've been using that one for like 8-9 years. It has one of my old programs that I enjoy so much that I just don't want to, but I have to. I had to stop myself in the middle of the line there. I have to sooner or later replace that particular machine. When you have 7 computers, they're like family, You kind of save things on them, and I have them, parked on different situations like clouds and so forth, but still I don't want to lose the machine. All right, anyway, there's the dollar, and the dollar seems to be telling us pretty much that it's just going sideways, and a lot of people were speculating today that we're going to see a 0.25%. I'm getting the chat line up, so I'll be able to see us in a few seconds. Here we go. We just started another machine out of sleep. It wasn't really closed. It's just sleeping. There it is. And there I am. I can see the chat line now. And I see Robin. Yo, Robin. Starting off, what's today? Today's Wednesday, right? So it's Happy to Hump Day. And we have Mr. Oh, there's George. Hey, George. And we have the Federal Reserve going to do its thing at 2 o'clock Eastern Standard Time. And Mr. Powell, I think, is speaking at 2:30. So that should be very entertaining. Powell is... I could say a lot of things about Powell, but what it comes down to in the end result is that he seems to be a step behind. He reminds me of an old hunting dog we used to have around here, which we didn't use for hunting to begin with. But it was a beagle. And the kids, we had adopted this poor beagle that had gotten just set free, or, let loose out in the middle of the highway, up on the state highway, and we grabbed it and treated it like our own for a bunch of years. And then when it passed, her name was Sally. And when Sally passed, we ended up getting another one. Then became Sparkle. Well, Sparkle was a real piece of work. Hey, Timothy, how you doing? Howdy. Hey, Janos. And so, in the end result, Powell reminds me of the old Sparkle, the beagle. Always like I could see it up in my office, because my office was a couple stories tall, overlooking the fields, and I would see, the rabbit going in a certain direction, and it would take Sparkle like about literally a minute following the same path, but just always a step behind. And so, just that is Powell. It seems like a step behind. Now, I understand the great contention today. What he's dealing with overall is the unemployment numbers are not matching up whatsoever. It's all upside down. And so that really has things even worse, because that's one of his benchmarks about raising rates and not lowering rates, or Make it a quarter point, make it a half a point. It's that type of thing. And so that's the, I guess you could say that's the confusion of it all. Metho, yo, Metho. Yeah. So yeah, you like that, Janos? You hunt. So, it's like watching a step behind, constantly a step behind. First he got bamboozled into calling inflation for almost a whole year transitory. In other words, it was going to stay at 1.5%, 2%, like it was with the 6% growth or 6.5% growth under Trump. And somehow or another, he got lulled into thinking that it would stay that way no matter what policy was stopped, what policy was implemented, what policy was going to be removed, irrelevant of the success of them or the failure of them. And so here, we're talking in July of, what was it, me? I'm saying in July of 21, I'm going like, we got massive inflation. And him and Yellen are talking crazy, like, oh, this is transitory, don't worry, irrelevant, don't think about it too hard, you're being ridiculous, And they invent the word transitory, like as if it's going to go away in 2 months. And it's like listening to Krugman, totally illogical economics. And so next thing you know is let's see, what is that? In AN. Oh, there you go. Another metaphor I heard was that Powell thinks he is driving, but he is in the right side of the car and inflation is driving. That's right. That's exactly it. But more than that is it's not as much that the inflation is driving, it's the policies. In other words, he's supposed to be a decision maker. He's not supposed to be a hound dog. He's not supposed to be that hunting dog where it's supposed to be on top of its prey. Instead, he is a step or two behind constantly. But his pay grade is he's supposed to be a thinker, right? He's not supposed to be a dimwit, And so you get this. You watch it. And you shake your head at it at the same time. So in other words, a whole year goes by, and finally, going into May of 2022, they dropped the word May from July. I'm complaining on the webinars here that it is not transitory, and policies are doing this to us. And he's talking transitory until May. Remember, in May of 2022, I'm complaining in July of 21 that we're there. We've ignited the inflation fuse, and he's drifting, So anyway, I don't need to beat up on him. I'd rather look at the markets. But the end result is that he's always a step behind. So I don't even want to hear what he has to say at 2 o'clock. I'll just watch the markets, and the markets will tell me if he did something smart or stupid. Then I'll just read his transcript, and it'll be a lot easier just to read his transcript instead of me mumbling and complaining to myself about what kind of idiot is this. So anyway, that's it. That's it. We're done with worrying about 0.25% or 0.5%. We're just going to watch the markets like we always do with the math. And there it is right there. You can see the dollar index. You can see it's drifting down a little bit. And if it's drifting down, then pretty much what they're saying is interest rates are not going to go up too high. That's what it really comes down to. So they're trying to tell us maybe a quarter point. That's what they're trying to do. And then when we drift over to, say, let's take a look at the euro. When you look at the different pairs trades and you see the way they're acting, speaking of which, noticed I have some good stories on the South African rand and the Swiss. Credit Suisse is dealing with a bank, with a company, and the stock itself has dropped, and they're not lending money to them anymore, and so forth and so on. That's probably the swap we saw by the Federal Reserve to. There was the stories about the Swiss bank, Credit Suisse, having issues coming into 23 and 24. That's probably it. That's what they probably lent them the money for. We saw the Federal Reserve do swaps with the Central Bank of Switzerland, and then they probably pushed the money over to Credit Suisse. So, all right, let's put the euro up there. I'm going to do it from J4X first. There's the euro. You see a little green here. You see the little green line trying to turn up. And over here, and if anybody has a question at all about what is that and how does that work, we'll explain that. I will watch his tie color. Yeah, I trust the tie color more than I trust anything else. I guess if he wears something reddish, it's the power tie. Back on the old Wall Street days, we used to say that the red tie is the power tie. You wear that red tie, then that means that you're going to be making big decisions. So Powell always wants to look like he's making big decisions, when he obviously is not. Like Janos says, he's in the passenger seat. He's not really in the driver's seat, and that is the insanity of it all. All right, from there, let's jump over to on Chicago Quant. We'll take a look at our work. That's not it. Nothing up my sleeve. There it is. There we go. And there is, right there, there's the euro. And you can see we're pressing into the buy again right there today. Seeing a little strength. It's been 3 days in a sell. Again, dead cat as far as I'm concerned. I just don't have any real faith that we can keep the dollar overpriced the way it is. It's just way too overpriced. It's got to come down into the 90s. Just has to come down into the 90s. When it comes to the dollar index itself, right? That's the euro itself right there. But yeah, I'm convinced. I'm still mumbling about the dollar index itself. It's got to go into the 90s. 96, 95, 94, I don't care. Right around in that area will make more sense than a 102 with a high of all time of 115 no more than 6 months ago, or 4 months ago at this point. So there is the euro. And you can see our weekly signal. What is that? Let's get rid of that one. I don't understand that. There's the zero line right there, the white dots. And the weekly is looking very firm. You can see the fast-moving algorithm right here, the little green dotty thing, trying to break down. And I think, what's today? Wednesday, right? So I guess it was Monday. It was pushing down, almost touching the zero line. But no, it's lifting back up again. And you can see that pressure is on the upside there. And then now you can see if we widen this out a little bit better, you can see here, it's making its move up after yesterday trying to make a low of a couple of weeks. And you can see here it's cutting through the line there, and we can do this thing like, we're going to go like this, and we're going to make this green. And I'm going to make it go all the way up through it, since this is probably going to be sitting there after the webinar is over with. I'm not going to be looking at it again through that picture. I'll be looking at it through a different open process. So, and there it is right there. You can see that strength. That is about that. Same as you see over on J4X. Where's the mouse there? There's the mouse. Same thing. It's trying to turn it up in there. Let's take a look at it on a weekly basis on J4X also. Right there. And you can see there it's doing the it's doing the same thing. Right there. And that's exactly what we have going on. Let's go over to the cable and see what the cable's doing. I haven't even looked at the cable. I was paying attention to Euro last night more than anything else. Since it's a Fed day, I try not to get too involved. As long as the positions are accurate, set the right way, I don't really pay attention when they get stupido. Unless they give me some nice profits out of nowhere. There is the British pound. You can see that moving up. Also on the weekly, a little weaker there, but you can see at the top in a range. And then we drift over to the daily. Before we do that, let's put it up on Chicago Quant so you can see both weeklies together. And there's the cable right there. You see same thing, all that strength. And they tried to dip a little down. We'll see how that goes. The fast is still well above the plus area. Still in a sell. It's not lifting like that. And I noticed that the Euro GBP pairs trade was also getting shifted from that. So I wasn't too surprised here to see this not lifting the way the euro is. Now let's go to the daily. And there's the daily on the cable. and you can see it's just all holding up pretty well. They're going to be waiting. I think the Bank of was it the Exchequer in London, the central bank raised its rates last week, did a quarter point. So that's good. So I mean they're not going to be caught flat-footed, I guess you could call it. We've seen those times where in the beginning when the new prime minister came in, they got caught flat-footed a little bit. And the next thing you know is that the currency got beat up pretty hard. That's what, I guess, let's see if we can scrunch it up right there. Mousy, right there. Yeah, it got beat up from that right in there with the new prime minister. And then another new prime minister came in. And I think what they did is they didn't raise rates when the Federal Reserve raised rates. And that really freaked everybody out. And that straightened it out right there. Showed that they were back with the gang again. Be with the gang. The central bankers gang. I guess they wear like pinstripe suits. Summertime they all wear seersuckers. The gang. They don't wear colors. They wear suits. All right, and then from there to Swiss. Let's see what the Swiss is doing this morning. I'm impressed with that. They're not getting twisted by the Credit Suisse situation, which is a good thing. In other words, there's no problem going on there with Credit Suisse Bank. They've dealt with their issue. I think that money was already put into place. I heard somebody out of Japan, I think it was, or was it the United States, complaining about the mistake that the Federal Reserve did that put major pressure on the Swiss and the Japanese yen about 5 months ago. I'm not really sure if that's it. I think there was a little bit more to that story. I think we're seeing the end result. In other words, like looking at a cake that's already been baked and has the icing on it, and someone puts the candles and the cherries on top. And I think that they're taking the story from that point. I don't think who's going to cut the cake instead. I think there was some problems. I think Credit Suisse, which did a Deutsche Bank thing, which did a Citibank thing. In other words, they were almost basically in bankruptcy area. A country of that size cannot afford to have a major bank go bankrupt. Like we can't afford to have a Citibank go bankrupt. So, I think that sometimes we're seeing the second side of the story, not the first original cooking of it. Putting it in the bowl, spinning it, putting the eggs in it, the whole bit, the flour. I think it's more of the end result. And then they go and they say, wow, look at that. You're eating this really nice cake. And they see the person using the knife to cut it, not the one that baked it. It could be the same person, but it's still the end of the process. All right, and then from there we go over here, and we'll put the Swiss up on J4X. Right there. And, we've talked about this the last couple of days. I could see this thing doing the 89s, the 90 and a half, something like that. And there it is. It's drifting down there. Now, that's the weekly chart, matching up very well to Chicago Quant right here. You see that right there. Right at the top of the financial issues. And this top was developed by the Federal Reserve because they gave them swaps. They did swaps with them. They gave them a lot of cash for the circumstances of the time. So, I mean, you got to wonder, we have Lloyd's of London out of business now for those older traders around here that probably thought that the Rock of Gibraltar would fall into the Mediterranean if Lloyd's of London went out of business. It's out of business. And so, but Gibraltar is still sitting there. And then we have people thinking that, can you imagine the Federal Reserve is propping up Switzerland on some level at the same time? I mean, the history of Swiss bankers, it's really a surprise, but I'd imagine that it's got nothing to do with Switzerland per se. I would think it's part of the rules that we've talked about here, how all the central banks have to keep a stability, keep their currencies in line. That's part of that QE stability thing that's going on. That's that fundamentals that doesn't match up to physical reality anymore. And we are starting to see a little bit more fundamentals again start to work, like earnings, interest rates, inflation, labor. We're finally starting to see some of these fundamentals actually have an effect on the market, whereas we went through a whole decade now of them being like parked in a closet, like as if, okay, we'll pull that out when we want to wear that again, when I can fit in it. So that's what we're seeing there, and that's it right there on J4X. Now there is the daily. You see it's making that nice little dive now. Sounds good to me. I like the stability of currencies. It's always nice. And we talked about that yesterday, about the poor situation on one European, Euro-Asian country that's taking it hard on the chin. All right, let's jump over to the yen, and then we'll go to that Euro-Asian country itself. And there is the dollar yen. And like I said, I saw out of the Bank of Japan today, they did another record purchases of bonds. So their own bonds. Talking about taking the money out of your left pocket and putting it into your right pocket. I mean, what a world we're in anymore. Or what's it? You pay Peter to pay Paul, or something like that. Take from Peter to pay Paul. There's all those odd expressions about the irrelevancy of it. Now you can see here on the weekly, they were making a threat. We were the slow stochastic was moving up almost into the buy side. Now it's backing off a little bit. You can see that weakness right there going on. You see it the last couple of days, it's been moving back down again, and so it's affecting the weekly signal. You can see here it went into the daily buy there, and now we are minus. So we are actually threatening again to get into the sell, and that's what I would expect. I would expect that we're going to make that all the way down, just and then we'll turn it off, just to remind you that usually we put it up at the top, but I just don't even feel like doing that. It makes it easier just to do it that way. From there we go now to the Euro-Asian country bordering Europe, known better as Gobble Gobble or Turkey, and you can see here, it's trying to lift up a little bit today. Nice. It's trading in the 20s, and that is all-time territory, just literally 14, 15 ticks away, I think. Let's see, where's it trading right now live? Let's put it up on J4X so you can see it live. Live, not Memorex, but live. And there it is. Is that it right there? Euro Turkish lira? I think that's it. No, I don't think so. I think that's a bond. That's it. There we go. So it's trading at, no, that's not right. That's the bond. I just put the bond up there. So that must be, let's see, there's the euro. There it is right next to it. There you go. Okay, so you can see here, trading at 2050. The all-time high is 2069. You can see it's kind of in the middle of the range. It's in the 49, 50-ish. What's that, 38 to 49. The green line is trying to turn up again like it did here. Maybe they're going to blow through. Now, they did. Let me just stop my train of thought there for a second and change it to another train of thought. And that is, it didn't do that at the end of the year last year, which was kind of impressive, because usually the Turkish lira usually has issues going into the end of the year. Settlements, that type of thing. But last year they didn't have that. So now maybe we're going to see it, going into February. I don't know. I'm not sure what has stabilized this product, but it definitely has calmed down a lot. I'm going to take a sip of my tea. Excuse me for a second. Excellent day. Yeah, I'm not sure what is going on. We're not getting any real good news out of Turkey anymore. We've seen this currency. We were talking about it yesterday, going from 1 to 20. Can you imagine? Imagine if you even saw the euro go from 1 to 5. When I was a young man, I used to trade the British pound, and I think it traded in the 5s back then. And it fell to 1.5. That took a couple years to do. I remember trading the yen. The yen used to trade at like 300 or something like that. Now it trades at 1 point something, or 200. It was 200 and something, the yen. I remember days where it moved 8 and 9 handles at a time with no problem. So, here we see the Turkish lira. We've lost. I guess they don't do the puts that they talked about doing, and that seems to have been part of the chemistry that helped the currency fall back down a little bit going into December of 21. Now, December of 22, it's been a quiet year, and it's been parked up there, but the liquidity seems to have disappeared. I'm sorry, the liquidity has disappeared. We've come into a period now where the Turkish lira is very illiquid. And Janos was saying that the vendors in Turkey don't put prices up on their signs anymore. They just negotiate. So I guess, in other words, if you have euros, they probably give you a certain price. If you have dollars, they give you a certain price. If you want to hand them gold or silver, I'm sure they want to give you a certain price. But pretty much the economy over there now has gone total black market on some level or another. No way to run a country, that's for sure. All right. From the Turkish lira, we're going to drift over to the Canadian dollar. And it popped yesterday. I guess it popped, gained against the dollar, which means it goes down in value on the screen itself. And right there we are. You'll see some red. There it is. Now, that is the daily. Let's put it up over here. You'll see it a little bit better. Yeah, see that big drop like that. So we were going into the buy. I think we were across it. I think we had a green line, up here. And the next thing you know is the energy market, which is what we watched the energy market when looking at the Canadian. And there's the March contract. You can see the move. It doesn't look too tenacious. Let's move it over here. Come on, Mr. Mouse. Right there. There we go. So you can see here it was down in the 77 area yesterday. Well, matter of fact, 76.55. And by the close last night, it settled at 79.03. So it was a $2.50 move from low to settlement. And when it comes to the high, the high was 79.25. So low of 76.55. That's $2.70 move. And that's what gave the energy to the Canadian right there for it to drop and gain against the dollar. And that's pretty much the way the Canadian, it's about 70% of the time the Canadian moves with the oil market lockstep. And then there's like 25-30% where the politicians are doing something stupid and it kind of goes a different way. Rarely do I see politicians do something smart in Canada. There is the South African Rand. They're really upside down this morning in the sense that we're seeing this upwardly movement, and basically we should be seeing what is that? That's like all the way back to January 13th, or where's the low there? January 12th? Is that January 12th? I think that's January 12th, yeah. So let's put gold up on the J4X, and there's gold trading at 1929, okay? And then over here we'll put up this, there's the South African Rand. So that's the daily. So no doubt 3 or 4 days it's been pressuring itself. But there is January 11th, there's the 12th. This thing roared from, what is that area? It's like the 1870s area, okay? There's 1870 right there. And there is the 12th right there. That's the 11th, that's the 12th. So we're looking at gold going from 1870 basically up to 1960 or 50 or something like that. So it's almost like a $100 move. But here we had, at the same time, we had the South African Rand going the opposite direction, which is wrong. That's not normal. And they have a lot of problems over there right now. Not counting, we have the politics $500,000 cash. We keep that up on the screen just to remind us of why it's so stupid looking and not working the way it has worked for years. And that is that they're having those problems. They're having utility problems, energy problems. The policies are catching up to them. You can only do so many stupid things, and after a while it actually affects you. In other words, what's Margaret Thatcher used to say, you can, sooner or later you run out of spending other people's money. Their money runs out. So in other words, you don't have money, you're spending other people's money, and that's what they've been doing. And we're starting to see it filter into the currency. The currency itself is having a major issue here because when gold goes down, the South African rand goes up in value. And all you can see here is this is working perfectly all the way up to this point right there. And then they find the $500,000 cash underneath the sofa in the president's office, and he refuses to resign. And ever since then, it's just been one ugly looking chart that makes no real sense anymore. And so that is kind of like the situation we're in. All right. From there, let's see. So there's the gold itself, and we're just going to show you gold over here too, real quick. There it is, right there, and we'll use this. We'll finish off the Mexican peso, and then we'll take a look at silver. And there's the gold. And so the last 4 days, it's been going downish, and then the South African rand has been going upish. So it's like, okay, good. It's finally starting to get into its situation, but the problem is that this should be doing it from the 15 or the 1470s, now 1485, 1490 area on the ratio to 1501, 1505, and instead it's not. It's at 1750, hitting that yesterday. So it's 2.5 points, 2.5 handles off the norm. And that's all because of the politics, right there. And then, like I said, this morning there's even more ugliness going on. I don't need to get into a South African conversation about the energy and the utilities, but they're having real problems there financially, and they're lucky it's the summertime, so I guess they're probably having air conditioning problems more in Johannesburg and the rest of them. And so, it's not here for us in the northern hemisphere. We're in the center of, or we're like a month plus into the winter. They're a month plus into the summer. So, all right. We'll finish off the last currency, and that will be the Mexican peso. And it's been hugging the lows, the 3.5-year lows at this point. I mean, just way down. That's bullish for Mexico and bearish for the dollar, which is okay with me. What else can we say about it? You can see it there. It's just trying to... It's in the plus, I guess. Did it close in the plus yesterday? Let's see. Let's widen this out just to get a better flavor of it. I think it did, yeah. So closing a daily buy yesterday right there. And today you're seeing a volatility indication going on. You see the green and the red on the same bar, and you can see that it's trying to break down. It's still plus by the hair of its chinny chin. Let's fix that line too. Let's make it the cute little dotted line. Like that. Make it thinnerish. There we are. This way it makes it thicker. Like that. Like something. There it is. And so it's just above it at the moment. So it's still holding on. We were flirting with the weekly, right? The weekly was trying to get into a buy. And now it's flipped around again. You can see the fast moving is still touching the zero line. But the green and the slow moving algorithm is deeply underneath the linear time manifold there, the negative one. And the Mexican peso seems to be doing just fine at the moment. All right, no questions out there by anybody. I'm surprised. Please, ask a question. I'm always happy to answer. Remember, there are no dumb questions in trading. There are only long answers or short answers. Oh no, not that again. I'm seeing something on the physics essays. They're using some picture thinking that they could find the beginning of time. I wonder about mainstream science anymore. And let me just now that I saw that jump out on my screen. Let me just move this over for a second just to show you what I'm talking about when South Africa right there. South Africa's energy crisis could spark a political and economic disaster. I think it's already there. They're having problems with the utilities down there. What's this about? Let's see. The protesters are not only targeting the president, but also the ruling African National Congress. How about that? Well, the ANC and the Labor Party are they've been fighting for a long while now, so it doesn't really matter. But anyway, just thought I'd show you that headline. That's the one I saw this morning. I was reading about the utility problem they're having. Energy. I guess the windmills are not working. The beginning of time is 01 1900. See any registration? Yeah, I hear you. Can you believe that stuff? That'll drive me crazy. Hey Daniel, how you doing? Yeah, they took a picture of what they called old. I looked at the math last night. They looked at James Webb pictures of some really, really old stars that are older than the Big Bang. And so now they come up with these wacko ideas that they're going to be able to discover when time started. Yeah. You agree with the projection of VIX being at 24 to 25 during the Fed meeting? I don't know. Is it there now? Let's go take a look. I didn't know they were jacking it like that. Let's take a look and see. Are you looking at the options? Is that what it is? Is that the strangle? That could make some sense. Let's put the VIX up there though. But that would not surprise me any. Now why can't I get the VIX? Where are you? There it is, right there. What do we got the VIX? We got it trading at 1962. Are the options projecting that? I can go in and take a look at an option spread. Yeah, probably the straddle, right? Remember, they're not exercisable. Remember, they're European options. And so there was more of a distortion on the, what they'll do is they'll take the 2 at the monies, 2 out of the monies, and then they take 2 of the wings, something like that. So in other words, let's say we're, for those who get scared when I discuss options, we'll give you a warning. I'm going to count to 3, and I'm going to start talking about options. You can lower the volume. You don't have to hear that scary stuff. 1, 1.5, 2, 2.5, 3. Okay, we're going to talk options here. So what happens is that the one problem with the VIX options about projecting direction is that they're European and they're not American options. Okay, there's a difference between the two, of course. European options cannot be exercised until expiration. American options can be exercised anytime. So what happens is you get I want to call it a hump. You get a distortion because now it's not. In other words, you can pump up the prices. Let's see where the market is at 9:35, 9:40, 9:50 Eastern Standard Time. The first 15-20 minutes of the U.S. market. But right now it's probably more of an illiquid market. Yes. I was saying this yesterday in the webinar that I think I was using the New York Stock Exchange volume and then the NASDAQ volume of stock volumes, and then I was mumbling about the idea that now the Dow Jones Industrial Average has 6 or 7 NASDAQ stocks. I think it's 7 NASDAQ stocks, and they are the bulk of the volume in the NASDAQ. They can trade billion plus couple billion shares, just the 7 of them, and so then you have the rest of the universe of like 4,000 stocks in the NASDAQ or 7,000 stocks, whatever it is, and they're the other like 2 or 3 billion that trade every day, and the New York Stock Exchange now trades maybe $1 billion a day at most, maybe $1.25 billion once in a while on an active day, but so that's what I'm saying is that the options market has never slowed down. Whereas in the old days, New York Stock Exchange traded 3-4 billion shares a day. The NASDAQ traded like about the same, maybe a little less, 2.5 to 3.5. They were basically at parity with each other. Now, because of the indices at the New York Stock Exchange now having NASDAQ stocks in them, the volume is greater at NASDAQ. And so, but the option market itself has grown well beyond both of those exchanges. So in other words, whatever it was 10 years ago, 8 years ago it was more. 6 years ago it was more. 4 years ago it's more. 2 years ago it's more. Right now is more. They're all record. They break records. Whereas when you put the New York and the NASDAQ together, they're not breaking any records. Also, you have black pools now in there, in the New York and the NASDAQ stock volume. And so those black pools can be, a combination of high speed. Well, high speed trading is blended into there. Most of the high speed traders I know are not making any money. They're just making money off of commissions. So they're not making money off of the trades themselves. They're making money off of the commissions. They're getting paid to generate volume. So most of NASDAQ, not most, but a big part of NASDAQ, maybe a third, if not more, of NASDAQ and New York Stock Exchange volume is artificial. Whereas the volume in options is real. You can kick the tires. It meets the road. It's real. So they were, let's see. Daniel says, yep, and they were yesterday. Real strong downtrend. Option market now bigger than spot. Oh, yeah, easily. Well, we can take this conversation a little bit deeper, and and I'm glad to, have the conversation if anybody wants to hear it. But like the Wilshire 5000 only has like 3,200 stocks in it now. They don't call it the Wilshire 3,200. They call it the 5,000 still. And the same thing with the Russell and so forth. They don't have, well, the Russell has the low cap stocks, but they don't have, there's been mergers. What's happened is, what was there, 3 IPOs 2 years ago? I mean, we used to see 125, 150 IPOs a year, if not more, sometimes 200 IPOs, initial public offerings. You don't see them much anymore. And so companies are merging, reducing the individual company and stock off the exchange, and they're not adjusting for that. So yeah, you're right. Let's see. I'm bigger than ever. Daniel says, "Do you agree with the okay? Do you agree with the notion that no bear market ends without a 40% VIX?" Let me read that again. Do you agree with the notion that no bear? No. I matter of fact, we go in and out of bear markets now on a because of the volatility is back to relative normal now. So in other words, we went through 8-9 years with low volatility in the sense of volume. In other words, the Dow's trading at 25,000, and the market moves 200 points, and everybody goes crazy like as if it's a crash. Or if it moved 500 points for the day, they act like it's 1987, when in fact, to match up in 1987 when the stock market dropped 500 points, that was a 23% drop. That day, a 23% drop. Now, when the Dow moves 500 points with it trading at 34,000, that's a 1.5% drop. 1.5, not 23%, not 2.3, 23. Okay, so 40. I think that goes under the. I have to put it under the category with Janos, and that is that the fundamentals are not exactly worth trying to trade for more than a few minutes at a time. In other words, back before quantitative easing, fundamentals would, when fundamental information came out, the market would move for days on it. 2 or 3 days, 1 or 2 days, depending on what the fundamental news was. Labor, unemployment, PPI, CPI, inflation, put whatever you wanted to label it. It used to move, a couple of days. There was a trend, a path. Now, the news comes out, the markets move, and I've explained why they move, and they move for like a minute and a half, and then it's done. And then they go back onto whatever they're doing. So no, I don't see the VIX being. I said this in a webinar, I guess about a month ago. Remember when Janos was saying, let's watch the VIX more often, and I was saying that I don't see the VIX as a leading indicator. I see it as a lagging indicator, and that's what the problem is. Now, is it a confirming indicator in the sense that once it does get to into the 20s and the 30s, is it really like telling us something good? I mean, not good, but like telling us accurate information? Not really. It's just following. It's a lagging indicator. It's kind of like a MACD in my head, or a moving average. It's kind of behind the curve, not ahead of the curve. So, does that make any sense? Let's see. Doc, okay. So no, I don't. I don't believe that 40 is going to be like. Now we seen the last one. What, 26? The market bottomed at 26, 27. Let's just take a look at it on Chicago Quant. Oh, first of all, there it is right there on J4X. So that high was, what was that? That's 25 and change, right? And that's back in. Let's make this the whole screen for a second. So that's, what's that? That's 30. Is that 30 something? That's 33 back in October. Okay. Now, let's go take a look at it over here. Let's throw it up bigger over here, because for some reason J4X normally has much deeper data than I, but not today. Where's the VIX at? Not there. Let's go over to here. I know I parked it somewhere around here. There it is. So when we go back to October, let's tighten this up a little bit. There's the October and there's the 30s, right? And at the same time, we go to the S&P 500 right there. We go to October, Rocktober, and there's Rocktober. There's your lows at was that 30, 33, 36, I don't know, something like that, 30 something. It didn't get to the 40s, and the S&P 500 was at 35 basically, 35.30, right? And so it's moved up to 41, and so isn't a bull market the old bull market? Here's the other thing. We just was it Daniel said the bull market, but let me go back and read Daniel's statement. You said something that was important. I mean, you said a lot of things, but they're all good. But you said something that clicked in my brain. I can't find it now. Or I must have just read something and answered it in my head. So it's in my head somewhere. But defining a bull market. Oh, I know it is. It's right there, the statement. Do you agree with the notion that the no bear market ends without a 40%? The question is, what is a bull market and what's a bear market? That's the bigger question nowadays. Because they're not, ever since quantitative easing, they're not the same anymore. Look, the old days, you had mutual funds, hedge funds, and retirement funds. You had professional investors moving the markets, combined together with the specialists and market makers in the exchanges. Okay, now with quantitative easing, they run it all. The Federal Reserve runs the market now. It does repos and overnights and things like that at a drop of a bucket. I mean, they buy futures contracts, or they use surrogates to buy futures contracts. I mean, how do you justify not you personally, how can anybody justify Citadel getting $1 billion overnight every night for free? That's the biggest market maker / one of the biggest hedge funds in the world. How do they get $1 billion overnight for free every night? Which means they can do a reversal or a conversion and make, a quarter percentage point, or, I'll tell you what, who would turn down listening to this broadcast, making a quarter percentage point on $1 billion for free every night, or 1/8 of a percentage point? I'll take a 16th. I won't get greedy. Give me $1 billion overnight for free, and I'll make a 16th on a spread. In other words, like a reversal conversion situation, And the Federal Reserve does that to everybody. They lend overnight to dozens upon dozens of institutions all over the planet, giving free money to keep stability. So trying to define a bull and bear market is really hard to do nowadays. So you can't take the options themselves and say, okay, this is the definitive situation there, because we just came out of a bear market. I mean, it was official. They both moved over 20%. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq all moved over 20% from their lows back, back in October. And what did the VIX do? The VIX. We'll go back to the VIX now. The VIX went to what, 35 or something like that? Let's go to the VIX again. There it is, right there. And the VIX high was, what was that? That was 34.88. That's the physical high, 34.88 that day. And it closed at 30 at the end of the day. Tell me that the Fed wasn't in there just, throwing more money at Citadel and all those others. Matter of fact, I heard back then. I had heard stories. I have an old partner that's, made markets, was head of their markets division, and he was a partner at Citadel, and he was running their options, and they he didn't tell me. I hadn't talked to him at that moment in time, but he has told me that they get money from the Federal Reserve overnight, and he goes and puts spreads on. That was 3 and 4 and 5 years ago. So I mean, you see this. Let's see if we can widen this just to emphasize the fact itself. Right there. You see this. So they panic the market, and what do they do? Imagine you're selling premium, and trust me, he knows how to do it as good as anybody. 4.44 full VIX points. You don't think you can make some do-re-mi on free money? Yeah. Let's see. Where we at? Daniel. Yep, makes sense. Oh, good. Yeah, and that is really the question. What is a bull or bear market anymore? Matter of fact, that should be the title of this webinar today. Bullero market. Yeah, that's what I'll go with that one. How about a Bapow market? It's kind of like watching a Batman movie or TV show. Pow, bang, that type of thing. So, yeah, it's more like bullshit. Oh, but did I say that out loud? Fed market. That's what it is. And that was the concept. This is what Bernanke wrote his PhD thesis on. He wrote this. He wrote this PhD thesis when he was young. And when they had to, when 2008 came around, they implemented it. And, it's been a circus act ever since. So, that's why it's kind of funny when they talk about, China going to be a dominant market factor in the world market. Are you kidding me? That's a joke. It's a total joke. China can't even figure out how to open the door, let alone build a house. Let's go to where are we at? So yeah, that makes some sense. That could be the. Remember again, they can get away with that. They can overprice and underprice VIX options because they can't be exercised. And so no one wants to make a market. They'll let the one who wants to make it look like it's crazy. Who knows? It might be the Federal Reserve screwing around with the VIX. We don't even know. I mean, with all that money that they have, anything's possible. Matter of fact, I know it's possible. I know they're doing it. They're doing something there. All right, now where do we go from here? We go to where are we at? That's VIX. Oh, let's take a look at silver. We didn't take a look at silver. Let's see what they're doing, because the metals markets tried to lift yesterday, and you can see it's trying here again. We got a green and a red. They came off the lows, but they're not in the buy yet. Now, this is nice. You see it's 0.04. So it's trying to get into the buy, but we got a red and a green, and it's actually down for the day just by a couple pennies. 7 cents or something like that. Over in gold, we didn't really look at it that way. You can see gold is firmer than yesterday. almost touching 50. I think the high today is like 49 and something, 49 even. And you can see it's trying to get through right now as we speak. Matter of fact, I can put a line, the green line in there. Put it like right there. I thought I did do that. So it has the potential to go into a buy. And we put it up there, and then if it does it, confirms it, we put it down in here on top of the algo itself. And then, let's see, where do we go from there? Let's take a look at copper. There's copper. Copper was interesting. They gave it a pop a couple of days ago, and now it's trying to drive itself back down again. Holding up well on the weekly, like the way gold is, and then obviously we go back to silver real quick, and you see silver is, went into a sell last week, and it's found a low, but it's not doing anything particular at the moment. Then we go over to what's today? Wednesday, right? So let's do platinum, and we have somebody following palladium now too, so I can actually show you palladium. There's the platinum. It's in a weekly sell for 1 week. It's platinum. So it looks like it's going to close into the weekly sell this week. Looks like the pressure is on right there. And then what else have we got going on? The metals market seems to follow the platinum. Obviously, watching the South African rand was really a good tool. Now it's a mess. For years we could watch that. In the last month now, it's been all over the place. And that's kind of a sad thing, but that's the way it goes. And then if anybody cares about looking at palladium, there it is. There is the March palladium, and it's trying to get into the buy. You can see the weekly is trying to turn up. It's minus 2.20 still. We've been in a sell since the 2000-ish area, and where's it drifted to 1600. Jumped into the buy here. Didn't last long. Matter of fact, it was kind of interesting. Let's move it over. It went right there. It went into the sell there after jumping into the buy in this 1700 area and going back into the sell at the 1680 area. Is that 1667 area? So $33. But now it's trying to get into the buy, and we just need to see the weekly get into the buy. All right, from there we go over to the energy sector, and there's, like we saw that it's, oil is moving up a little bit more since the last we looked at it, and same thing with nat gas. It's kind of doing its. Let's see if we can only get to I don't know. I gave Robin a number. Don't ask me where the number came from. It was out of my thin air type of brain. It was like, I could see it going down to 70%. Remember that, Robin? When it was trading at 360, and you had that trader that you'd been talking to off of the board of trade, and he was like, "Where's the bottom? Where's the bottom?" It's like, we've been bearish on this thing, since the cows came home. I mean, we've been bearish for a long time. You can see here on our charts, when you look at the two signals, we went into a sell almost up in the $8 area there. We've had only one weekly buy once out of that curved run where we got in the daily buy there and it ran up, and then we went right back into the sell. So since September, basically early September, we've been in a weekly sell all those weeks but 1 week, from the $8 area now down to $2.66, making more lows. But remember, 3 years ago the product was trading at 138, and that's where I came up with it. I said to Robin, I said, maybe this thing, it went from $1.38 a cubic foot up to $10 a cubic foot, and now it's trading at $2.65 a cubic foot. So, awful hard to. If you were a buyer down in the lows, you're still 70 or 80% in the money. It's just all those people that bought it at 9 and 10 and 8 and 7 and 6 and 5 and 4 and 3 who don't follow our math. Let's see. Just a little, I have to say that, I got to have my ego once in a while. I can't be this guardian angel all the time. I got to be a little crazy. All right, from there, where do we go from there? That's natural gas. Oh, I want to see. You know what I want to see? I want to see the Spanish energy company that we follow. See what they're doing with it in Europe. Is it trading at 25.80, 25.90? Let's see, where is it at? And that would be. Oh no, it's not that. No. What is that? Let me close that. It's a friend of mine's shoulder. Close window. There we are. I like to play pre-med once in a while. Let's see. Now, where is it at? I'm going to go to the energy company. So I go over to J4X. There's J4X. And we go reach down. I think we have some economic news coming out as we speak right now. Let's see. Where is it at? Right there. And the energy company in Spain that we usually cue off of what's going on on the price of energy in Europe, natural gas in particular. 25.78 offered. Yeah, I figured it might be in the 70, 80 area. So I would love to see it in the 18 area. I mean, that would be great to see it fall down and help out the people. See, yeah, Yana says, you must be the biggest promoter of those Spaniards. I probably am, but it's the only way we can see the energy in Europe. I mean, what market? Giannis, what market can you see right now in natural gas? Is it $25 a cubic foot? Where is it right now? It's the only way we can view it. I probably am the biggest promoter, but that will not make them money. Well, I'm going to take another sip of my tea. All right. And I've blown through the hour, of course. EU natural gas index is in the works for Ducascapi. I'm looking forward to it. Trust me. It used to be a great arbitrage between European natural gas and American natural gas costs. You know, the prices themselves. But I mean, we're looking at $2.66 a cubic foot, and we're looking at like $25 a cubic foot in Europe right now. That's insane. That's because of the war situation. I have heard. Oh, I see. Seems that there are issues with providers. Yeah, for delivery. I always say that when China and Russia keep on talking about creating a brick. It's like, yeah, but who's going to deliver anything? It's just going to be lip service. Let's see. Seems like I have heard rumor that someone is keeping the price artificially down. Well, I know that we shipped more natural gas this year out of the United States to Europe than ever before. So I'm sure we're the ones helping out. I doubt that they want pure speculation inflows from minor brokerages. Probably. Yeah, it's just like the currencies. The central banks are forced to keep things in a range, and if you step out of that range, you get a lot of grief from the Federal Reserve in the United States. Remember when Mnuchin would come out every quarter and give us the list of who is manipulating their currency and who's not? Now, we don't see any of that under Biden. Biden, they don't even tell us they don't tell us anything. So, all right, traders, we're out of here. This is Doc, having enough fun in one day that I don't know, I shouldn't have. I'm going to just sing my way out as usual, and that is happy trails to you until we meet again. I used to love those Roy Rogers shirts. I have a Roy Rogers shirt. Maybe I'll put it on one day and turn the camera on. You'll see me in a Roy Rogers shirt. I love those sequences. Happy trails to you, to all our trading friends. All right, buckaroos. Catch you guys tomorrow, and gals, same time, same channel. So this is Doc saying arrivederci.